the Europeans aren't allowed to answer this because they've tried it once and you don't get a second chance, guys. You're out. That's you. You're finished. When I see reds appearing on this, the red is the delta. What should my trade be when the red is at a higher print? So when you see red here and red here and red here and red here, what should my trade be? Oh, the Americans are on the ball here. I can't believe it. What happened to the? Maybe too early for the Brits. Maybe too early for the Brits this morning. Yeah, I mean, when you see red here, the basic idea is that if the red print is higher, you should be looking at that print and saying, right, if that print's higher than that print, it means that that print must be trapped. It's almost in some respects is similar to what we covered in Forex yesterday. Does that make sense when I mention that? So, for example, when we see a print of minus numbers, for example, here, when we see a print of minus 280, and if the price was to go above that, I would know that there should be a sell trade there, right? So that type of idea that there is a heavy sell in place, which is good news, but when we go above it, we could maybe get a bit of business done. It's the idea of getting people trapped and possibly getting institutional knowledge about what's going to happen next. I mean, it's just another version of that type of simple concept, but we've got to know these simple concepts because it's a very easy, ready reckoner to think about what your next trade is going to be, which is visible literally on every single candle. So when we look at every single candle, there's always a delta. So when I see a 20 and then I see a -7 and the -7 is above the 20, what happened to the 20? No, this is just a 1 minute chart, Theo. This is just a 1 minute chart. So what happened to the 20? They're all trapped, right? So the sellers are trapped in here. So what should we be doing? We should be, if we want to be doing something, we should be able to recognize that that means that those sellers are trapped and therefore we should be tapping that supply and buying into it, right? So when we see the seller again, 7s up to 22s, and again, you see the same thing. You say, well, all I'm doing, by the way, is marking the prior candle POC, right? I'm marking the prior candle POC. So in other words, it is a real-time thing you can do. And obviously, if I'm marking the prior candle POC, because if there's 7, then we're obviously thinking the majority might well be at that without having to go into footprint charting, right? So I'm just marking the candle POC. So what happens if we go below this type of trade area? I have a real opportunity to maybe grab a little bit of trade. I don't want it going sell side and rattling. I want to see it doing the same thing like here and then going bid. So I could then go bid against that last POC there, couldn't I? I could have taken this market bid at that exact point. So I could have put in a buy stop order there. Now that I've seen it testing it, nobody turned up. We're still doing the same. None of this selling's managed to push the price down. So it's taken as a big aggregate view of the market that what the hell is going on in here? Absolute nothing. So when we see that, we simply then say, well, sellers at higher prices, that's weak. So a seller at a higher price is weak, right? So we can trap these guys. We can trap these guys. So we start to put these guys under pressure. We see them rejecting here. It's an easy buy trade. We make the money. In other words, red at lower prices is normal. Green at higher prices is normal. You agree? When green starts to appear at higher prices and then you can see it's not getting anywhere else, then of course you're starting to think about buyers maybe overstretching into the top edge now. So when we know that that's the case, especially when the numbers are quite substantial, quite sizable, like 2 isn't going to get me excited, right? Whereas 35 could get me excited. 29 is definitely getting us excited because there's 29 buyers here and the price is well lower than it was before, right? So that's the exact opposite. So when I see that, I then look at that and say, well, there was 35 buyers here. There was obviously an idea that that's going to be a price that I'm going to be keen to recognize. We see it being rejected here. I'm a seller in here at 72s. And what happened to the sell? Boom. 72s trades 40. So another 30 ticks on the way back down. So just using this chart, now this isn't any different from the blue line. It's just presented in a different way, right? It is not any different from the blue line. It's just getting you away from always needing to see lines and being able to see this type of story in any format that happens to be handy. So when we see this story in any format, now we're just seeing the delta on a candle by candle basis. We're able to make that decision. So if the red is at a higher number, you should be buying pullbacks. Catch up with the right-hand edge and you'll see exactly this as a storyline. Remember, you can have a negative delta and a positive delta. It's either or. It's not both. So when we see reds, so what do we see at the bottom edge here? Red at lower, red at lower, red at lower, red at lower, green at higher, red at lower, red at lower, red at lower. But is it really lower? Well, it is lower, but it seems as if you look at that in the grand aggregate scheme of things, is it really lower? Seems as if it's a hard question to try and answer, but it's not really. If I just draw a line across all of that, and you've seen selling there, selling there, selling there, selling there, selling there, selling there, and selling there, has it gone anywhere? It's gone feck all distance, right? So when we see that, we're starting to now recognize that if we saw a seller at higher prices, we could use that if we wanted to get the safe trade ever. We could use that to get a safe trade, couldn't we? Does anybody see a seller at higher prices? Sure, there it is there, 10 contracts. You see it? So there's the POC, there's the 10 contracts, there's the imbalance if you want to use imbalances, because that's probably, it's either the POC or the imbalance where the seller is. And then from that information, guess what? You've now got two trade locations. I can now buy here, or I can wait till we go through the POC and buy there. Boom, there's your money. And from that trade, there's another trade that just made another $400 profit on the swing. What's difficult with that, Theo? Nothing, right? It's easy. And it doesn't have any blue lines. It's a very clean order flow chart. All you're trying to do is recognize its existence, aren't you? And obviously, if you zoom in, you'll see it is just a normal order flow chart, right? It's just a 1 minute oil order flow screen. It's got nothing special about it. It's just a normal order flow chart with deltas attached to it with all the bits and pieces. Zoom out, and all we've now got is the net delta positioning, which is the -10s and the 37s. And if at the present moment we're looking at this, what's the current trade? There is no trade, is there? Buys are at higher prices, sells are at lower prices. It looks as if this sale could be in trouble though, because that sales came in, the POC is a little bit higher than it was before. So whilst we've had 60, then another 30, and the second 30 comes in at a higher price, you're thinking to yourself, well, that could mean that there's a seller getting trapped at the top edge. We're looking at this stage here as the market is likely to now squeeze. So if you're bearish, you'll want to see that squeeze taking place, right? Because there's a lot of sellers up here. If this was a blue line, the blue line would be dropping down, wouldn't it? It would have a drop here, so showing that absorption. Well, without the blue line, it doesn't make any difference. I can still see it. Well, if you glance across at my oil chart, you'll see that the blue line is dropping here, suggesting that there is absorption here. So I don't need the blue line to see it. I'm better than a blue line. I can read this in terms of the total. I can read this in terms of the average, and I can then make a decision based on that as well. I can use a lot of candles together. Do I like the sell trade? No, I don't actually like the sell trade at all. I don't actually like the sell trade. So, you know, the idea of all these sellers possibly getting trapped, if I was wanting to be short, I would have to wait till I get the sweep. But the idea is that with this amount of selling coming in, I quite like the idea of getting down a little bit and then using that selling to get trapped and then maybe flip a little buy trade back in here. So what are you looking for? You're really looking for the seller to start getting jammed. I'd like to come down into balance about 35.40. I'd like to see the seller getting a little bit jammed down in here. Take a seller getting jammed at a slightly higher price, just like we got in here. Seller getting jammed at slightly a higher price, and then ripping a big buy trade into that as a trade. And that's what I'm currently looking for. Would you agree with that, based on the value narrative? Sure, because we're already long anyway. I'm assuming everybody's long. I did shout that one out. So I'm assuming everybody was long. Value was bullish. We ran the sweep. We got the sellers getting trapped into the bottom edge, which we've just discussed. There it is there. So the sellers getting trapped into the bottom edge. And then this guy getting trapped here. So worst case scenario, you paid 22 for this short, right? Sorry, for this long. You paid 22s. Worst case. And obviously, you're still long. You're still trying to get this price popping. So we're obviously aiming for prior swing high, which is obviously a price of around about 72s. So we're looking for 72 bid. At the moment, it's trading 60. So we're trying to buy dips. Selling coming in and getting trapped is a buy on dips. If you wanted to take that, for example, that 63 the lot there and buy into the press, absolutely fine with that. You know, you're just taking the deal, right? It's obviously got, what are we, about 5 minutes ahead of the NYMEX. We thought they were going to try and hold the price offered for the NYMEX Open, but obviously they couldn't do it. The value was too strongly bid at that stage. So we had to jump. And of course, now into the NYMEX Open, we might just use this as an exit, and that's us finished for the oil again. Remember, we've got a big commercial sell zone up here, which we are aware of. It's been in existence since we drew it in this morning. So again, just simple things, isn't it? Just noticing what the delta's doing, recognizing that the selling up here is getting nowhere. The buying is making an easy push to the top side, isn't it? So if you look across a chart like this, and there's a lot of selling, and it's not going anywhere to the downside, and it's at lower prices, you know there's a buyer in here. So mark the buyer. When you know there's a seller here and you're wanting to be bullish and it's not going anywhere, you know there's a buyer in here at 50, don't you? So mark the buyer. It doesn't mean you're a buyer. It just means mark the buyer if you're trying to be bullish. And then recognize that this could be a trade if you wanted to take it on. Just following this oil down just now to see if we can get another chance to buy some more, slightly better price than the 50, because obviously the 50 now has a lot of sell side liquidity in it, doesn't it? So I'd like to now sweep the 50, get that sell side liquidity, and see if we can get a buy off of that liquidity as we come into the NYMEX. Because at the moment, looking very bullish. The dollar needs to start. Weakening a little bit to help us out. At the moment, dollar strength is still my biggest concern rather than anything else. So we still need a few extra helping hands here just now to see if we can get a bit of business done. FTSE certainly went bid. We've got a good discount on the FTSE itself at 60, 64, 65s, and it's rallied up to 80 if anybody saw the value narrative coming in there. With a cable bid, you knew you had the discount on the FTSE to buy into. You saw the discount on the FTSE to buy into, and it was just a case of grabbing that discount price and getting long into it.